Welcome back, and you're tuned into Market Fatafat on ET, our show where we talk about all the stocks that have been buzzing on the back of news flows and technicals. But let's move on to the next stock that is buzzing on the back of news flows today is Mazagon Dock, and that is buzzing in trade. Why? Because now Mazagon Dock has been granted the Navratna status by the Department of Public Enterprises, and this came in as a filing yesterday in post-market hours. Now it has become the country's 18th PSU to have received this status and accorded with this status. Previously, we had seen, companies that are like Bharat Electronics, RVNL, Ircon, which were making into the list. And today, because of this, we're seeing Mazagon Dock that has been buzzing in trade today, holding on to gains of 4%. It was higher by 5-6% at one point of time. Now also managing to hold on to gains of 4% in trade, Sharon.
Alright, let's move on. Let's talk about Shivalik Bimetal Controls. This is a counter that we don't talk about that often, but the reason why this one is seeing an up move as such is because JM Financials has come out with a note where they've initiated a coverage on the stock with a target price set at around 730 rupees per share. What they're saying is the company is a niche player and it's geared up to capture the manufacturing opportunities. They are also saying that the company has gained dominance in the domestic market and is now ready to further expand the export opportunity with capex already done and capacity in place. They're saying Shivalik is a simultaneous player in the three opportunities, which is switchgear industry, smart metering as well as EVs, and it also aims to increase the revenue contribution from electric contracts going ahead as well. So also they're saying that the company has a PLI in shunts and is constantly exploring new industries for its shunt applications. So on back of that, they've initiated a coverage with a buy rating, a target price set at 730 rupees per share.
Okay, let's move on to the next couple of stocks that we're going to talk about, and Ankita is going to highlight in terms of Apollo Hospitals as well as Max Healthcare. Ankita, why are both these stocks under pressure today?
Yes, both the stocks are under pressure today because Macquarie has come out with a note and it is maintaining an underperform rating on both the counters because they feel that the chinks in the armor have begun to show. Indian hospitals' top line growth has been primarily driven by rate hikes as volume growth continues to moderate. They also feel that the organic bed capacity addition in the next 3 years is around 4x the addition of the past 5 years, and they believe that this would pressure the profitability. Like I said, they're reiterating the underperform on Apollo Hospitals and Max Healthcare, and they feel that their earnings estimate is likely to be below consensus, somewhere around 9 to 22%. And on the back of that, Apollo Hospital is under pressure, trading with cuts of 1.8%, and Max Healthcare is trading with cuts of almost 2% in trade today.
Okay, let's move on to the next stock, and Jinai, Time Techno Plus, that's the one you have highlighting today. What's the news flow here?
Yes, so the company has received an additional order for the supply of 10 kg capacity composite LPG. So this comes from Indian Oil Corporation, that is IOCL, and the total value for this order is about 55 crores. Now, if we talk about this, the additional order comes from the demand on the account of positive response from the end user the company got because of various usage of the composite cylinders such as explosion proof, lightweight and translucent body. Also, after successful first order, the company has also released its second order, and on more this, the company has also said that they are on discussions with BPCL and HPCL for further order discussions.
Alright, joining us now is Sneha Seth to talk about the stocks that are buzzing on back of the technicals. And Sneha, a very good afternoon to you. Thank you so much for joining us on ET now. And what's the first stock that you're going to take? Is it from the footwear pack? Can I say Bata?
Good afternoon. Thanks for having me. Yes, if you see Bata, recently it has been consolidating, wherein we have seen 1445 acting as a support. Today we are trading around those levels, and considering the overall consolidation, I believe one can go ahead and long this counter because it has a very good support zone around 14-20-25 zone. So I would recommend if someone wants to go ahead and long this counter can go long at current levels with a strict stop loss of 14.17, and the target expected would be around at least 1500.
Okay, 1500 is maybe a target that you're keeping an eye out on for Bata. That's the word from Sneha. But let's move on and talk about Dalmia Bharat. Why is that in focus? We have two downgrades that have come in from Dalmia Bharat from two brokerages. One is CLSA, other is Nomura. Now CLSA has downgraded the stock to an underperform from a previous outperform, cut the target price to 1,900 rupees from previous 2,050 rupees per share. What CLSA is highlighting is that they believe that overall in terms of the performance, they believe that now there could be some sustainability in the growth is something that they're watching out for. Right now the growth has been fine, but maybe that is something that they'll keep an eye out on in terms of the expansion going forward. And lowering the price estimate was mainly because they believe the volume growth is likely to be industry-leading going forward, but right now it's a bit subdued. So uncertainty in terms of expansion outlook is the main reason that they are cutting their target price. Nomura also has downgraded the stock to a reduce from a previous buy, cut the target price to 1,700 rupees per share. So midterm capacity target looks difficult to achieve and the limited catalyst for growth going forward, and that is why Dalmia Bharat is in focus. Though yes, recovered from the day's lows point, just holding on to gains of 0.3%. But let's not forget all these other infra cement companies, all of them have been buzzing today. So maybe that's the one to watch out for, that is pulling up Dalmia Bharat as well.
Absolutely, but let's put the spotlight on one of the sub-segments, or rather where you have a lot of these cement counters. The reason why they're active has to be the realty space, isn't it? We spoke to Gulam Zia of Knight Frank, who talks about the impact of price rise in the real estate space and what is exactly happening when you talk about the realty segment. Listen in.
About 5 to 7% price rise per annum is something which we have been observing for last couple of years, at least last 2 to 3 years, and which is in sync with market requirements, market realities. The buyers are okay to pay that kind of price rise, and till such times that price rise doesn't go haywire, say closer to double digits, etc., we are in safe zone. So this price rise is not worrisome for the moment, and that's reflecting in the transaction numbers as well. Not many developers are keen to get into the lower end of the market to cater to that segment because of lesser margins over there. So most of the focus is on the upper end, when you have quick sales are happening, margins are far better, and that is something which is reflecting in lower volumes of inventories in the lower end.
All right, let's shift focus then. Let's talk about the new listings. We had two new listings today. One is D Development as well as Acme. Both of them actually listed on the bourses on a premium. D Development Engineers was trading higher by about 66% in its debut trading. It opened at around 339 rupees per share, which is 67% premium to the IPO price of around 203 rupees per share. It also saw a blowout subscription, about 99.5 times the shares that were offered. The company also raised about 325 crore rupees in IPO by selling new shares, while its existing shareholders sold worth about 93 crore rupees. The company is aiming to utilize the proceeds that is raised from the IPO to fund the working capital requirements and repay some outstanding borrowings. And like I said, Acme trade also listed on the bourses. Right now it's trading higher by 11%. It listed at a premium of around 5.8%. Vinny.
Okay, let's move on and talk about PVR Inox then, Sneha. Yes, we have those new movie lineups that have come in. Kalki, a big starter movie that is coming out as well. But PVR Inox on the charts, what's the word there? Because now finally, after some bit of a consolidation, we're seeing a slight bit of an up move in the last few days or last month we could highlight. Technically, do you think that this up move is something that one should watch out for?
Yes, very much. If we look at the chart structure, this counter has made a good base around 1270 odd zone, and from there only we have seen a very smart buying interest. In fact, after quite some time, this counter has surpassed the 89 EMA on the daily chart, and there was a resistance around 1450 odd zone which it has surpassed today. So I think we may see an extension of this move at least towards 1520, 1525. So if someone wants to go ahead and long this counter, I believe the risk reward ratio is also favorable. One can keep a strict stop loss of around 1420 and go long.
All right, so that's all about PVR Inox. But Ankita, let's talk about Stylam Solutions and why is this one in focus?
Well, yes, Stylam is in focus today because Investec has initiated a buy on this counter with a target price of 2,000 3,362 rupees per share. And they feel that a different approach in marketing distribution versus the marketing leader has driven strong earnings growth for this company. Incremental expansion offers attractive ROCE, profitable in laminate and acrylic business, and also the potential investment by an MNC could enhance Stylam's tech capabilities, distribution, brand placement, and aid earnings trajectory and also multiples going ahead. They see an 11% EPS CAGR over FY24 to 26, and they have initiated a buy call. And on the back of that, Stylam is in focus today, in fact, trading with gains of over 12% right now.
Surely keeping an eye out on that, but let's move on to the next one. And Sneha, you picked out TCS, from the IT pack. Now, obviously, we know that, we're expecting a better fundamentals from the IT companies in the second half of this year. But on the charts also, will we start seeing the run up now, or maybe one should wait out before we actually start entering it?
If you look at the IT space, yes, it has not performed. If you specifically talk about TCS, we have seen some, profit taking. However, if you look at the overall chart structure, we have seen a strong comeback from the 200-day simple moving average on the daily chart. Today, it has also managed to, surpass the falling trend line resistance placed around 3,850. I believe we may see an up move very soon, because we are seeing decent unwinding in the call options out of the money call options here. I believe we can, if someone wants to do a trade into option segment, one can buy 3,900 call options of July series and trade, which is trading around like 60-65 zone, and one can keep a strict stop loss of around 37 and can expect a target of 127.
All right, Jinay, coming to you, let's talk about SANGHI Industries then, and why is this particular stock in focus today?
Well, yes, the company is on focus because the promoters have announced offer for sale. So Ambuja Cements and Mr. Ravi Sanghi, who are the promoters of the company, have proposed to sell up to 90.92 lakh equity shares of the company. Now this total represents about 3.52% of total issued and paid up equity shares of the company. We're talking more about the offer, then the offer opens for non-retail investors on June 26th and for retail investors on June 27th. The offer will commence from 9:15 a.m. till 3:30 p.m. on both of the days. And if you look at the stock price, the stock opened about 4% lower in today's opening session and now has completely recovered and is actually trading with the gains of over 0.6%.
Alright, so that's all about SANGHI Industries. But on that note, we slip into a break on this edition of Market Fatafat with the note that you have Nifty Bank that is just 77 points away from 53,000 mark.
52,000 was just yesterday.
I told you, new day, new number.
It's like 1,000 points is just like some cakewalk for the market, and Nifty Bank actually moving up. But yes, we'll keep you all updated with more of that after the break. But don't go anywhere. We'll be back with that. Welcome back. You're watching Market Fatafat on ET now. Moving on to the next stock at stock number 26. Today we're going to talk about Hindustan Foods. Again, a company that's in focus on the back of a block deal. You see the share is trading at higher levels since the get-go, now holding on to gains of 7%. Now, there was an 11% change of equity hands that has happened, around 1.27 crore share change of hands. And this is almost the value, we would say, was around 630 crores in terms of the value of these block deals. It was 19 block deals that took place in terms of an 11.1% change of equity hands. Now, what we understand from sources that Westbridge, Sixth Sense, and few other PEs are the likely players who have likely people who have sold the shares, and this is via the block deal that we're keeping an eye out on. We'll wait out for the buyers' names as well as the confirmation in terms of the seller names, but this is what we understand from sources. Keeping an eye out on that, 7% uptick right now for Hindustan Foods.
All right, moving on, let's talk about Manappuram Finance then, and that particular counter is in focus on back of a brokerage note. You have a CLSA that came out with the note. The stock saw an uptick of as much as 3.5%. Now it's given up most of its gains. CLSA has maintained a buy stance. They've gone ahead and raised the target price also of the company to about 240 rupees per share from 220 rupees per share. They are saying that the NBFC's gold loan business has seen strong momentum since March. This is when RBI barred rivals from disbursing such loans. Remember, the RBI had barred IIFL Finance from disbursing gold loans, citing material supervisory concerns. So Manappuram Finance, what they're saying is benefiting from acquisition of new customers being turned away by the competitor. This is what CLSA is saying. They've also saying that they are raising the FY25 gold loan growth estimates to double digits from single digits, as well as FY25-27 overall net profit estimates by 4 to 6%. So on back of that, you have Manappuram Finance. They were seeing a good move through the course of the day. Now it's trading higher by about approximately 1% or so.
Absolutely, but let's actually talk about what Samit Vartak, this CIO and partner at CH1 Investment, had to say in terms of the banking space and what he likes at this time. What is he looking at it in terms of that? Listen in.
Majority of the time I have stayed away from banking segment, mainly because of the earnings growth not really meeting my expectation of closer to 25%. But I do track it very well. So historically, if you see that 2011-2019 period was a period when PSUs were in really bad shape. They had huge gross NPAs, and then they had to write off their book, and they were not in a position to lend because their balance sheet didn't allow. So it was sort of a vacuum period where private banks took away huge market share from them, right? But after 2019 cleanup, a lot of these PSUs have recapitalized. They are in pretty strong shape now, and they are back in the game. So it's very difficult now for private players to take away market share from them. And so if you look at the growth of private players during that phase, it was way better than the overall market. I think they will struggle to do that. And hence, you've seen that they have gone through a huge time correction, because I think their valuations went up and now they're correcting. So probably they have reached reasonable value level, but I don't think they can grow at the same rate at what they had grown at during that phase. When the PSUs really go through huge gross NPA buildup and they peak the cycle where now that their bad assets will really hurt their growth, that's when private banks would do well.
All right, let's move on then and let's talk about the pharma pack then. Dr. Reddys in particular. Sneha, how is the chart looking for this one?
If you look at the chart structure, this counter had been consolidating, wherein on the higher side, I believe 6,120 has been acting as an immediate hurdle. But looking at the overall chart structure, I feel it has made a strong base around 5,680, 670 odd zone, and any move beyond the recent highs of 6,120 would be very interesting to watch out. I believe the risk reward ratio is also quite good if someone wants to go ahead and long. Should be keeping a watch on the levels which I mentioned, that is 6,100, 120 zone. Any move above that, it can bring that will push this counter at least towards 6,400 and plus levels. So need to keep a close watch on this counter.
Okay, keeping a close eye on Dr. Reddys there, but let's move on, talk about Metro Brands. Ankita, why is this one in focus today?
Well, yes, Metro brand is so in focus today. Goldman Sachs has come out with a note, and they're saying that the demand for the non-wedding related footwear continues to be stable. Also, the FY25 guidance is for the mid to high teens, year-on-year sales growth, and also the growth is likely to be back-ended loaded in FY25 with a relatively softer base of the second half of FY25. Now, the industry competitive intensity is pretty high, but Metro is likely to continue discounting the discipline, and also the BIS certification related supply chain disruption is unlikely for Metro, and the inventory position relatively high versus the history to help mitigate the potential BIS certification regulated disruptions is likely. And also the Fila brand repositioning efforts have been delayed due a BIS implementation, and also the Fila EBO scale up is likely to accelerate from FY26, and on the back of that, Metro Brands is trading with cuts of over 1% today.
All right, so that is about Metro Brands. Let's talk about Nestle. Sneha, how is this one looking on the charts to you? Looking attractive right now?
If you look at the counter, yes, it has, if you see, it has been in the consolidation phase. But looking at the overall move in the key indices, especially Nifty, Bank Nifty, I believe now we have already seen the frontline stocks giving a very strong move. I believe from here on, IT space or the pharma space, and for that matter, this particular segment also may see some buying interest. So this counter, if you look at specifically, it has been taking support near the 200-day simple moving average on the daily chart. The overall chart structure looks quite good, and the base formation is done around 2004 440 zone. So I believe one can go ahead and long this counter. I expect a sharp move coming in once this counter surpasses 2550 560 odd zone, and which can bring at least which can bring it towards 2650 first, and then we can head towards 2700 750 odd zone even.
Okay, let's move on to the next stock. And Junai, M&M Finance, why have you picked out this one for us? Why is it in focus?
Well, yes, so the company's CFO, Mr. Vivek Karve, has actually tendered his resignation to pursue his interest beyond full-time employment. Now, commenting on this, Mr. Rahul Rebello, who is the managing director and CEO of the company, has commented that they expressed their appreciation towards Vivek's contribution towards the last 4 years. But given his association with the company, he will be with the company until the declaration of financial results of Q2 FY 2025, that is up to 31st October of 2024. Also, the company has announced analyst call on 28th of June, which will be for the same topic, which is worth tracking. So that is why M&M Financial is definitely a stock to watch out for.
Let's move on and quickly talk about IGL. Why is that in focus? Just a short while ago, you had seen the flashes at the bottom of your screen that Incred has downgraded IGL to a reduced from a previous ad rating, and they've cut the target price to 419 rupees per share from previous 539. Right now, the stock is trading at 474. So they're expecting a further downside from this level. They believe EV policy and the shift in terms of sourcing is something that will hurt the margins, and expect EPS to fall by a 14.4% CAGR over FY 24 to 27. So keeping an eye out on this one today.
All right, let's move on. Let's talk about Adani Total Gas then, and that particular counter is in focus because PNGRB has given the nod to establish and operate a city gas distribution network in Jalandhar. And with the addition of Jalandhar, the company now has 34 geographical areas where it operates city gas distribution network and retails compressed natural gas. Remember, in the year 2020, Adani Group company entered into an agreement with J. Maddock and Energy, as well as J. Maddock Holdings, Ishar Gas and Ishar Gas Jalandhar for the acquisition of the business related to city gas distribution and retail sales of compressed natural gas in Ludhiana, Jalandhar as well as Kutch. And now they've got an approval coming in for Jalandhar.
Okay, surely keeping an eye out on Adani Total Gas there. But let's get in some highlights because budget is nearing down, and talking about that, as the countdown has begun for the budget this year, the sources are telling ET now the new PLI scheme that may be in the pipeline. Let's go across to Prakash, who's joining in with us to tell us more details on that. Prakash?
Yes, we are learning from our sources that the government is likely to announce some new PLI scheme in the forthcoming union budget. We are given to understand that the Ministry of Finance is considering various such proposals which have been prepared by the different ministries after wider consultation. Sources are informing that the new PLI scheme is likely to be announced for the steel sector, which is going to be second such PLI scheme, and for that Ministry of Steel has already done extensive groundwork. In fact, the consultation process has already been completed, and the products have already been identified going to be covered under the new scheme. In addition to that, sources are also informing that some new sectors are also going to be covered under the PLI scheme, and that include sectors like chemicals, toys and footwear as well. The industry has already made a strong case to launch a PLI scheme for these sectors, and we are given to understand that now Ministry of Finance is considering this proposal. In addition to that, sources are also informing that the fund allocation under existing PLI scheme is likely to be increased as well. We are given to understand that the fund allocation could be increased by more than 30% based on demand. As you are aware that the government has already launched a PLI scheme for 14 sector, and now we have been informed that some other sectors are being considered, and that could be announced in the budget. That will help government to increase domestic manufacturing capabilities. Along with that, that will also help to generate more employment going forward.
All right, thank you so much for that, Prakash, for getting us that budget exclusive. But let's talk about the all-important. The men in blue are all set to take on England in the second semi-finals of the T20 World Cup tomorrow. Remember, the much-awaited clash will be India's chance to avenge the loss against England in the last edition of the World Cup. But all eyes will be on weather tomorrow as it threatens to play the spoil sport. My colleague Karishma is here with the report on what can we expect on the match day. Karishma, over to you.
Many would ask what role would the weather play as far as the 27 June semi-final India versus England is concerned. Well, let me explain it to you. It's going to play a huge role. One, because rain is forecast for the 27th of June. Now, if the match were to be called off or be abandoned due to rain, then it is going to be good news for all the Indian cricket fans because they would have qualified for the final of the 2024 T20 World Cup, and they will be looking to win that trophy that they last won in 2007 under MS Dhoni.
All right, thank you so much for that, Karishma. I'm sure that it's going to be an early match for all of us, but everyone will be glued to the screen as well as glued to checking where the market rates are going to go. But with that, we
too much to handle at the same time.
Too much to handle at the same time. For now, let's handle what the markets are doing because we are touched at record high levels, and like we said, Nifty Bank is just distance away from 53,000.
Absolutely, but with that, it's a goodbye from Sharon, myself, as well as the team who put this show together. Thank you so much, Sneha, Jinay, as well as Ankita for joining in with us.
If you like this video, then like, share and subscribe to ET Now.